The talk continues right here on the Morning Scramble. Thank you for being here with us. We always enjoy having you as our audience, and we hope you're having a good morning so far. We don't want to dampen your morning if you're in high spirits, but we're going to talk about money right now and exactly how much the national debt is. There's varying figures and varying opinions on that, although the figures, it depends, I guess, on who's reading the figures. With me is Ken Beckrich. He is Phoenix Online Trading Company, and on the phone for us is Laurence Kotlikoff, American-elect party presidential candidate, but by your own admission, Laurence, you don't expect, obviously, to win the race. You're entering the race. It's the American-elect party. Am I correct?
Well, you're correct. No, I expect to get the nomination. I expect to win. So, you may not expect it, but I do.
And you're going to be a two-term president, aren't you? You know, I have a term for our president now, but it may not be two. There is a term to describe, but it may not be two. We don't know. All joking aside, of course, we're joking right now. Ken, when you were on before, we were talking about online trading, investing in the world today, national debt, all those figures. Laurence, you say that the national debt is not in the low trillions, as they are saying, but in the high trillions. To what do you attribute that? How do you validate that?
Well, we economists look not just at the official debt, but also all the unofficial liabilities. But we also take into account all the, so Medicare, Medicaid, Social Security. These are liabilities, paying for the president's lunch, all the discretionary spending. And then there's also some resources to pay for the stuff called taxes. So if you do a complete balance sheet and you look at not just the official debt, but all the unofficial obligations that are projected by the Congressional Budget Office to be paid through time, and then you subtract off the value of all the future taxes, you have what we call a fiscal gap, a difference between the liabilities and the assets on this balance sheet basis of $211 trillion. That's a real number the public should be looking at. The country is actually broke, and the official number is about $11 trillion of debt in the hands of the public, and that's a molehill compared to the mountain of $211 trillion.
And is that number getting bigger or smaller?
The $211 trillion rose by $6 trillion in just 1 year because the baby boomers, they're 78 million large in number, are getting, every year closer to collecting this enormous amount of benefits they're going to be getting. It'll be about $40,000 per head, which will be about 85% of per capita GDP when the boomers are fully retired per person on average for 78 million people.
Ken, your association with Laurence, the two of you came together how? Give us the story.
I've read his book, excuse me, he writes columns in Business Week that I read on a regular basis, and the analysis is just compelling, where you understand that really we're in a lot worse shape than you thought.
I'm not a great mathematician by any stretch of the imagination, but thinking about figures that you're throwing out to us, Laurence, we're broke and don't know it. It's impossible to pay nothing's impossible. Is it close to impossible to pay this off? Well,
most of the fiscal gap here, I mean, if you wanted just to come up with new taxes, you'd have to raise everybody's federal taxes. Every single federal tax would have to go up 64% immediately and permanently. Now, what I'm proposing at Kotlikoff2012.org is a set of fiscal reforms, which is the least painful way to fix things. And the most important thing here is getting control of the health care spending, which the CBO projects the federal government and state governments, they're now spending 10% of GDP. It's projected to go up to 23% of GDP. I want to give everybody a basic plan for 10% of GDP forever, give everybody a basic plan, but keep the total cost at 10% of GDP forever. Now, 10% of GDP is a big number for a basic plan for all Americans. Switzerland spends 11% of GDP on all its health care. So you can get a very generous basic plan for the entire population for 10%. But if we keep with the structures that we've got now, if we keep the president in place or we put Mitt Romney in place, we're going to have complete, total bankruptcy of the country.
How much time do we have to solve these problems?
We're out of time. The country is not bankrupt in 10 years or 20 years or 30 years. It's bankrupt today. If the creditors who are lending us money realize how bad the situation is, and all they have to do is they don't have to trust me, just look at the Congressional Budget Office's long-term forecast, or the IMF came out with a very similar study last summer. You'll see numbers that horrible situation, because we've been running 6 decades of pay-as-you-go Ponzi scheme financing of Social Security, Medicare, Medicaid, and other government programs,
right,
not facing the bills.
Okay, and I think in all fairness, we try to be fair here. In all fairness, we can't lay this entire problem at Obama's feet. President Obama,
not at all.
We can't do that. This has been in the making long before Obama took office.
Eisenhower doubled the scale of Social Security. President Bush, the latter, the son, put in a $15 trillion Medicare Part D. In other words, we've had programs that are popular, to help the elderly, but they've helped all the elderly, including Warren Buffett's, right? And we're taking from young poor kids to give to Warren Buffett through this system. So we have to get to something that's reasonable, that doesn't pull the rug out from under the elderly. It gives everybody a basic health care plan, gives people a modern Social Security system, gives people a tax system that actually makes sense, doesn't have high rates, has a broad base, but it's fair, progressive. We can do this if we have the right leadership.
Why do you think the world is still loaning us money?
I think the world is looking at other places like Greece, and they're looking at the official debt numbers. They're missing all these unofficial debt numbers. Greece has had pension reform. Italy's had 2 pension reforms. They have complete control of their health care spending. So we're actually in much worse long-term fiscal shape than Italy or Spain when you look at the longer-term obligations. In other words, our government has put more of our liabilities off the books. We've done more Enron-type accounting. You have to ask, where did Enron learn how to do its accounting? It learned it from Congress. And
yeah, which we think we should learn from Enron, but they learn from us, and so therefore the circle continues, doesn't it, Laurence?
Yeah.
Thank you so much. Where can we find your books, and where can we read you, Laurence?
Well, Amazon, I've got a new book called The Clash of Generations, which just came out with Scott Burns. He's a co-author, syndicated columnist, but also Kotlikoff2012.org is my campaign site, and my website is kotlikoff.net. So, yeah, lots of places. Just Google me, Kotlikoff, Kotlikoff. You'll find a bunch of stuff.
I'm tempted to write you in on my ballot, Laurence. Thanks for talking to us.
Hey, I got you over. See?
Great.
Pleasure speaking with you.
See, I'm going to win. Okay, bye-bye.
Bye now.
Bye.
Okay.
Staggering figures.
Indeed.
I mean, it's sobering.
It's either sobering or makes you want to get drunk. I don't know which.
Ken's gonna stay with us. Ray Martin is going to join us. Ray Martin is an investor talking about, when the market took this away, how to get it back this away. Back on the Morning Scramble. Joining Ken and myself, we have Ray Martin, a full-time engineer who lost a significant amount of money in the market crash between 2005 and 2010. That's when the market went this way. Hopefully the market's going this way. We don't know that for sure. Ray Martin in the engineering field, and we were speaking on commercial break. You're in a profession, a field that is being so outsourced.
Oh, absolutely.
Not only, obviously, did a lot of people lose money in the market, many people are seeing their jobs being outsourced. You're just one of many with that, which really adds to what we were talking about with Laurence, which adds to the deficit situation we're in right now. A little bio on yourself, Ray.
Well, basically, I'm a mechanical engineer, and I've been working in the aerospace industry since the 70s. And nowadays, engineering jobs are being phased out to places like Mexico, China, India. I found myself in a situation of having difficulty finding employment. With that, spent a lot of focus on investing, making mistakes, making some successes, but still making mistakes. With the prospects of not having an engineering career to finish out at retirement, I said, I got to have a second stream of income. That's when I connected up with Ken's company, Online Trading Academy, and started taking classes.
Ken, we're talking about investing, though, again, to play devil's advocate right here. I don't think we all, or many people, feel real secure in that because the market is so volatile right now.
Correct.
Or always has been, obviously,
Sure.
if you're honest. Okay. So how can we feel safe, or should we?
The only way you can feel safe, what I've always said to people, is either understand how this works, get educated properly, or stay out of the market. To go into the market the way, quite frankly, the average person does, not understanding how this works, is just a huge mistake. You cannot walk into one of the most competitive things and one of the most lucrative things in the world you can do without having the right information. The problem you have now, because of the things Laurence was talking about, the dollar is going to lose a tremendous amount of value. Everyone's income is going to be affected tremendously going forward. You don't have the choice of sitting out anymore. So from our perspective, and the reason we have the school, we just think that education component is critical.
Does gold, again, when you say that, that's the first thing that really enters a person's mind. When you talk about the dollar being devalued.
Yes. Worthless might be the right word at some point.
we think gold, we think precious metals. I mean, is that elementary, is that amateur thinking?
To some extent. There is a place, I think, in everyone's portfolio for gold, but you have to know how to own gold properly.
You can't be naive about it.
You can't be, and you have to also know there are times to buy it and times not to buy it. I mean, if you bought it a couple of years ago, you're sitting on some pretty big losses right now. So there's everything we teach. It doesn't matter if you're trading rice or beaver pelts or gold or a stock. It's all based on trying to identify where the smart money is buying and where is it selling. And it works with gold, it works with anything, because you can make money both when things go up and go down. The problem most people have is they watch that E-Trade baby on TV, they think this is easy. They go out and they can make money when the market goes up, just like they did in Arizona real estate a few years ago, and they don't realize these things can go down. You actually can make more money faster when it goes down, but the average person has no sense of really how to do that.
That's a very misleading commercial that should really not be allowed. That should be
I hate
censored.
that baby.
We shouldn't have a baby doing that, because that's a subliminal message, and it's not a good one.
Yes.
Ray, so you invest now. You invested then, obviously. You're still in the engineering field.
Yes, I am. I'm doing consulting currently.
Okay. Now, how's the consulting work in the engineering field?
It's
You have
slow.
to fly around. Okay.
It's slow.
You have
I
to
mean,
fly around the country. No.
Well, no, not necessarily. There's opportunities locally, but
Okay.
not like they used to be.
Now, jumping back into the investing, a little frightened? Were you scared?
No. I'm real good at losing money.
You got that down.
I got that down pat. And I'm also good at making money.
Okay.
The question is the volatility that was mentioned earlier. When I took the class, I learned something more about volatility that I had not known before. And that is, how do you protect yourself? How do you put a stop under your investment? When do you get out? I have made, probably 12 or 13 major investments in my life. Some of those I had an exit strategy. Some of those I did not. I also lost a house along the way. So the trick is how do you protect yourself?
Ken?
Yes.
I think you're there to tell us how we can protect ourselves.
Absolutely. Everything's risk management.
Hey, thank you so much for telling your story.
Thank you.